Saving for retirement is crucial, but do you know which retirement account best suits your needs? Today, we'll explore the tax implications of 3 popular retirement accounts: traditional IRAs, Roth IRAs, and 401k plans. First up, the traditional IRA. 1. Eligibility. Anyone with earned income can contribute. 2. Contribution limits, 2022 figures, $6,000 or $7,000 if you're 50 or older. 3. Tax treatment of contributions. Contributions may be tax deductible, reducing your taxable income for the year. 4. Withdrawals, taxed at your ordinary income tax rate upon withdrawal. 4. Penalty if withdrawn before age 59(1)(2) with certain exceptions. 5. Required minimum distributions, RMDs, must start at age 72. Next, the Roth IRA. 1. Eligibility depends on modified adjusted gross income, MAGI. 1. Phase-out limits apply. 2. Contribution limits, 2022 figures, $6,000 or $7,000 if you're 50 or older. 3. Tax treatment of contributions. Contributions are made with after-tax dollars, no upfront tax deduction. 4. Withdrawals. Qualified distributions are tax-free. 4. Contributions but not earnings can be withdrawn anytime without penalty. 5. Required minimum distributions, RMDs, none. Finally, the 401k. 1. Eligibility, typically offered by employers. 2. Contribution limits, 2022 figures, $19,500 or $26,000 if you're 50 or older. Tax treatment of contributions, pre-tax dollars reduce your taxable income for the year. 4. Withdrawals, taxed at your ordinary income tax rate. 4. Penalty if withdrawn before age 59(1)(2) with certain exceptions. 5. Employer match, some offer a match which is essentially free money towards your retirement. RMDs must start at age 72. When comparing these accounts, remember: 1. Tax deductions, traditional IRAs and 401ks offer potential upfront tax breaks, while Roth IRAs offer tax breaks in retirement. 2. Withdrawal flexibility. Roth IRAs offer more flexibility since contributions can be withdrawn without penalty. 3. RMDs. Only Roth IRAs exempt you from required minimum distributions. 4. Income limits. Only Roth IRAs have income limits for contributions. 5. Employer involvement. Only 401ks involve your employer, which can include a valuable match. One factor to consider is future tax rates. If you believe rates will be higher when you retire, Roth IRAs may be more attractive due to tax-free withdrawals. Conversely, if you think rates will be lower, traditional IRAs and 401ks might be preferable. Choosing the right retirement account depends on your financial situation, tax bracket, and retirement goals. Consult with a financial advisor to determine the best strategy for you. Invest in your future wisely. Until next time, keep planning and stay financially savvy. For more detailed financial tips and tricks, subscribe to our channel and hit the bell for notifications. Subscribe now.